Global President of the investment management business at Avison Young, which is a Toronto-based real estate company. During the summer, there were a number of real estate conventions held across Europe, and one of the questions that was being debated among participants was what's going on in the United States. Obviously, all of the policy fluctuation and the questions about whether the financial industry was going to break again. It's been a while since the GFC led people to start inquiring about what about Canada? Is Canada a suitable alternative to U.S. investing? On the capital markets panel that was held at the Berlin conference in June, global investors from each of the continents were explaining to the U.S. moderator what their concerns were about the U.S. market at present, between very high vacancies and concerns about liquidity. The moderator of that panel stepped back and said, well, like, what are you going to do, invest in Canada? And every participant said, yes, actually, we're looking at it. And so AFIRE asked me to see if I couldn't write an article that would help investors understand what they could and couldn't get from the Canadian market if they were going to rotate some of their allocation north. So that's the genesis of the article. Most investors understand that Canada is a much more regulated, uniform, institutional market, and that certainly the belief in climate change and preparing your portfolio for resiliency is still alive and well in Canada, but it's historically been a challenging market to get into because it's so well capitalized. And most of the Canadian investment community is in the process of active decarbonization of their existing portfolio and also preparing new generation developments for the future anticipated growth in Canada. And for that reason, they're looking for partners, they're bringing some assets to market, and it's an unusually good time to get access to quality investments in Canada while the Canadian institutions are recapitalizing in order to get prepared for the next stage of growth. And then the currency is also very attractively priced because of the impact or the unresolution of the trade wars. So the article explores all of those features and looks at economic substitution benefits of Canada compared to the U.S. And the net of that is you get a lot more stability, a lot more policy regularity with the same or better transparency and regularity of operation of law. Well, Canada's been a significant beneficiary of well-educated, well-trained, the usual tech visa crowd. The Canadian response to all that has been to radically expand its top-tier universities, invite foreign students in and to stay. So when you look at the population growth, the embracing of diversity, high levels of international representation in business leadership and political leadership in Canada. For many immigrants, when they get to Canada, it's a nice relief. Canada has very strong leadership that's actively working on diversifying the trade relationships, very well-educated population, enormous natural resources and natural advantages, including its outlook toward immigration. My expectation is that Canada will fare well and that the institutional strength of the market, the integrity of the rule of law, and the normality of the way business practices occur will just become more attractive to investors in the future.